globally. So with that, I'd like you to please welcome Matsumoto-san.
All right, thank you, Annie. I was going to do my self-introduction, but Annie does a lot, so maybe I don't have to. I believe the Nikkei is going to go to 25,000, okay, way up from here. All right. And there are reasons for that. You know, I'm not just praying that Nikkei should go to that level. I do believe there's reasons for that, and various reasons. But one of the reasons of why the Japanese stock market should go that high is the fact that ROE revolution is happening in Japan. You know, return on equity revolution is happening in Japan. And this movement is really happening just very recently, maybe just like last 1 year, or could be last half year. You know, to raise the ROE or to make the Japanese corporations corporate governance better, those discussions has been made in Japan many times for many years, but things never happened for the last almost decade. Could be more than longer than decade. But finally, somehow this time, this movement is really happening. And I'd like to, and that change is even to me very, how do you say, refreshing. I didn't expect this was going to happen just like a year or 1.5 years ago. So I'd like to share my thoughts and my experience with you, why this ROE revolution is happening, and where the Japanese corporations, Japanese capital markets should go. Okay, when we talk about ROE revolution in Japan, there are these are kind of topics I am going to talk about today. JPX 400 and so forth. So this is some of those topics may be familiar to you, and some are not. But these are all the last sentence, the salary and capex, that is a little bit a different topic, but all topics here, other than salary and capex, from JPX 400 to ISS, all those things kind of had new initiatives happened only like last 1 year, all together. So that really, how do you say, made the kind of pressure at the higher than the threshold. And this ROE revolution or corporate governance revolution in Japan are now happening. So let me explain one topic by one to you. First, the JPX Nikkei 400 index. This is the, I used to be on the board of Tokyo Stock Exchange for 5 years. And this discussion to create a new index at the TSC, this happened already like 3 years ago. Because changing the index is a very effective way to change the behavior of the big institutional investors. Because in Japan, most of the institutional investors are indexed investors, passive investors, not active investors. Pension fund, not only pension fund. Mutual fund and many places, most of them are indexed buyers. So that there's a discussion why the Japanese professional institutional investors are not performing as good as peers in the States. The salary scheme or all kind of discussions, and there are discussions how we can change it. But the easiest and effective, efficient way is just to change index. Then all of those passive investors just follow the index. So that the TSC started discussing about creating a new index like 3 years ago. And they created this JPX Nikkei 400 that is basically to calculate a last 3 year average ROE and pick the highest 400 companies from listed companies in TSE. Of course, there are a little bit of some other, how do you say, other calculations or other considerations. But I would say like 90% of the index is basically driven by this just objective calculation of the 3-year average ROE. And they launched this JPX 400 index last year, January 6th of 2014, just like 1 year ago. Okay, and this is, as I said, really the TSE or JPX initiative. The Mr. Saito, CEO of the JPX TSE, he was very determined to create this new index, because the Nikkei index is not a good index. I mean, compared to you are very familiar with Dow Jones Industrial. Okay, that is only 30 companies. But it, how do you say, it changes company, like recently Apple came in, and who went out, I forgot. Yeah, okay. And then they recalculate the index from the past, okay, so that there is that index, DJIA has got this survivorship kind of a bias into that index. So that index is well designed so that it tends to go up. Okay, but the Nikkei is not Nikkei index is not made in that way. So it tends to perform poorly, so that they create a new index, and that is ROE oriented index. And then they try to have a government to force or provide pressure to GPIF to change their index from topics into JPX 400. But that time, when this JPX 400 was announced, launched about a year ago, that the GPIF move was not yet confirmed, and that was just like a wish by JPX TSE. But later, last year, the things really start happening. That was in June 24. On June 24th, the cabinet issued Japan Revitalization Strategy. Okay, this is a purely cabinet initiative plan. That is a very, how do you say, high-level kind of a business plan for Japan as a nation. Okay, and then in this Japan Revitalization Strategy, they talked about corporate governance code, stewardship code, Companies Act reform, as well as they didn't use the word as GPIF or BOJ. They used public and quasi-public funds, but they talked about those, in this Japan Revitalization Strategy. It's not a big document. It's not a big document. It's a rather concise, the document, but that talked about the corporate governance revolution in Japan. Okay, and in that Japan Revitalization Strategy package, actually, this is a little bit too much, but it says as enhancing corporate governance at the top. So this is the, in that Japan Revitalization Strategy document, there's one section talking about corporate governance reform. And in there, basically, they are talking about those kind of things. Again, this is not a JPX or any think tank document. This is a cabinet, official business plan for Japan. It said that we should achieve the global comparable level of ROE, and they talked about Japanese corporations should do more new capital investments, bold business realignments, and also M&As. They also very clearly said that Japanese corporations should pursue the utilization of outside directors. And also, it also encourage the corporations to make the communication with investors better. It even says that we should have discussions on desirable investment of public and quasi-public funds. Okay, this is the, this is very, how do you say, very surprising. Okay, this is a governmental document. It's only like, I didn't count, but it's only like 15 pages of 20 pages document. And one out of these 20 pages are used for corporate governance revolution in Japan. And they talk about those kind of things. Okay, so it's the very strong commitment or clear vision explained by the government. And actually, in the past, the Japanese government, time to time, talk about those kind of things, in document, but it never happened. But this time, it is really happening. About 2 years ago, I had the opportunity to talk about the similar type of speech, this ACCJ, talking about the Abenomics. And that time, I explained that the ABE stands for asset bubble economy. And so Abe is very, he's very determined to get the Japan out of deflation, because the deflation mindset it's really bad, because people think about making an action tomorrow, because you can buy things cheaper tomorrow than today in a deflation scenario. So people tend to make an action tomorrow than today. And the simulation of those kind of behavior across the nation make the Japanese productivity much lower. Okay, so that deflation is it's a very deep disease for the nation. So Abe, I believe, decided to make Japan out of deflation, and the biggest decision he made was to change the monetary policy. Since the March of 1990, when at the peak of the bubble, the Japan made a decision, and MOF made a decision to set the cap for the credit extension to the real estate related loans. So that was so basically the nation set the cap of the credit extension. So that was the beginning of the oil prices started going down. The stock prices, stock market, real estate, and all general goods. Oil prices started going down since March of 1990, and it continued for 23 years up until 2 years ago. And then in the Abenomics, the Abe and Kuroda decided to print more money, as like all other central banks in advanced countries had been doing, and then to put Japan back to normal. It is very simple calculation. If the productivity goes up, then there are more number of products, and while in the meanwhile, if the amount of money stay the same, then price per product should go down. It's like if you create lots of cabbage, then price of cabbage goes down. Right? It's the same thing. The same money, more products, price go down. So it is very natural for the nation to increase the amount of money as productivity goes up. But Japan somehow didn't do for the quarter centuries. That's why Japan was put into the deflation. So they changed it 2 years ago, started printing money, the quantitative easing in a big way, and then naturally, the share price started going up, and also they succeeded in creating the expectation for inflation, or expectation for that Japan is getting out of deflation, so that the real interest rate of Japan used to be crazily high in the in the world, but now the expected real interest rate in Japan is normal, so that the yen is now, doesn't have to be too strong. Now it's getting weaker. Okay? That's something Abe did at the beginning of the Abenomics. And then later, next year, he came up with this strategy to reform the Japanese corporations. You may have read many times that Martin Wolf of the Financial Times, he has been writing many times that the problem of Japanese corporations is that they have $3 trillion of cash internally reserved and sleeping. $3 trillion. It's like 2/3 of the Japanese GDP. It's crazy. And unless we succeed in mobilizing this cash, if we succeed in mobilizing this cash, that would be the big, stimulus for the Japanese economy. Okay, so that's how I believe this Japan revitalization strategy came. Okay, and after this strategy was issued, there are several initiatives made. First, FSA and the TSE, they created a kind of committee to draw the corporate governance code. And that is basically, they introduced the model from the OECD, and then they somehow fitted that to the Japanese market. And they, just like 2 weeks ago, or a week ago, I forgot, the public commenting period was finished, and the final version of the corporate governance code was issued by TSE. And that rule is going to be in effect, I believe, starting this June, with the half-year probation period. But basically, that the code uses the principle called comply or explain. So it's not really forcing regulations, but you have to comply those code. If you don't comply, then you have to explain why you are not doing it. So because of this principle, even before this corporate governance code is in effect at TSE, I believe many companies will try to satisfy this corporate governance code. Okay? It includes that you should have more than 2 of the independent outside directors, and so forth, those kind of things. And also, after this Japan revitalization strategy was issued, the METI, another agency of Japan, the METI started the committee for the stewardship. And they are talking about how the investors make the engagement better with issuers, or vice versa, how the issuers should make the engagement with the investors better. And also they are discussing about the changing how the Japanese the shareholders meeting should be operated, because Japan has got kind of baggage whereby 20 years ago there are sokaiya, kind of gangster, come to the shareholders meeting and then accusing the CEO, the management, blah blah blah. So that is old news. Okay, we don't. I mean, I've been chairing the public company in Japan, the Monex Group, for 16 years, and I have had the general shareholders meeting for 16 times. I never encountered those sokaiya. Okay, it's totally changed, but still there are some sort of the past memory, especially among lawyers and mainly lawyers, and they advise. I mean, when CEO is usually I'm sorry, there are many lawyers here. I'm sorry. CEOs, in Japan, CEOs, they don't do CEOs for like 10 years. Okay, they do like every 4 years, every 5 years. It changes. So when there's a new CEO who may have a good, mindset to make the shareholders meeting open. Okay, I want to make the shareholders meeting more communicative, blah, blah, blah. But here comes the staff who's been taking care of the shareholders meeting for years, and trust banks or, the lawyers and those people. And then, CEO ask him, tell him, I want to make the shareholders meeting different this time. And they say, no. You are not supposed to do so. Okay, you should not communicate much in the meeting. Okay, most important thing is to make it finish as short as possible. Okay, and then CEOs, because he just becomes CEO, so he doesn't know what to do. And so they are advised by those professionals, so that they don't communicate much with the shareholders. Okay, we are actually discussing those kind of things in this METI committee. This is unbelievable. This is a government committee. We are discussing those issues, and we are discussing we should change it. Okay, including lawyers, banks, the issuers and investors. We are discussing those kind of things. Okay, so and also we are discussing. You may know that Japanese public companies, they have to issue so many kinds of documents about the in Japanese Yuka Shoken Hokokusho and all others. I've been doing this job for 16 years, as I said, but even I cannot remember the name of those documents, which we need to issue every year. Okay, so they are discussing to make those documents simple as well. Okay, so those kind of really substantial, a meaningful discussion is, believe it or not, now happening in Japan. Okay, in the Japanese government supported committee. And also, after this strategy, Japan Revitalization Strategy 2014 was issued, they worked on reforming the Companies Act, Kaisha Ho. Okay, and that's been changed by now, and that includes the how the Japanese corporation should deal with the outside directors. Okay, and what else? Okay, and also, as you know, GPIF shifted their index partly from topics into JPX 400. Okay, and also BOJ when BOJ did the further easing, the early part of not early part, the fall of last year, Mr. Kuroda specifically commented that they would buy JPX 400 ETF. He didn't say topics linked ETF. He said, we are going to buy JPX 400 ETF, very specifically. Okay? So somehow, all of a sudden, all those efforts are kind of aligned, orchestrated, at the same time, to the same direction. So it's now really happening. To make the situation better, the ISS, Institutional Shareholder Service in the States. Okay, it's you may know it's the largest proxy vote advisory company in the States. They announced all of a sudden, November last year, that as for Japanese companies, effective February 1st, 2015, that is already happened, any Japanese companies whose 5-year average ROE is below 5%, they would put no for CEOs to be re-elected as a board member. Okay, it's I don't know why this happened. I don't know if Japanese government asked ISS to issue this kind of new policy, but anyway, this happened. And since this happened, as you know, the ROE is calculated as net income divided by shareholders' equity, and to increase the profit, net income, instantly is not easy. It's going to take time. But to reduce the denominator, shareholders' equity, is actually easy. Remember that Japanese public companies have got $3 trillion of cash internally reserved, sleeping. Okay, so it's easy for them to say, to pay more dividend or buy share buyback, do the share buyback. And because they have a $3 trillion of cash reserved. But by doing it, they can reduce the denominator and instantly increase the ROE. Okay? And for many Japanese good companies, to achieve 5% ROE is not difficult. Just pay more dividend, just do more share buyback. They can easily achieve those numbers. So this came, and CEO started thinking, oh my God, let's buy back some shares. Let's pay more dividend. It's easy. So they don't have to be shamed at the shareholders meeting. Okay, so that happened. So this is the amount of internal reserve of Japanese corporations. It's been, it's been increasing. This is 2000. This is 2014. As you see, it used to be, if the $1 being 100 yen, it was like $1.5 trillion, like 15 years ago. Today it's more than $3 trillion. Okay, it's crazy amount. Okay, meanwhile, the dividend, paid by listed companies. This is from 2008 to 2015. This is maybe estimated. And while the Japanese corporations accumulated, the accumulated reserve became twice in last 10 years. They didn't, the amount of dividend they paid didn't really grow. Okay, now it started somehow growing. And this year, for the fiscal year ending March 2015, the dividend payout by Japanese listed companies is supposed to become the historical high. Okay, so that's happening. I show you some examples. This is Amada, company called Amada. They said after revitalization strategy was issued, but after the JPX 400 was launched. And Amada, I believe they really wanted to be included in the JPX 400. So they said, okay, by 50% share buyback and 50% dividend payout. And then as you see, this arrow is the day they announced, the share price went up. Aoyama Trading, in case of this company, this is just recent. This is after ISS announcement. This is, I believe, in January. They said, okay, we pay you. Because they have a lot of, they say 130%. And also, they raised ROE target from 5.1, which is hovering around that threshold by ISS, to 7%. Share price went up. Fujifilm, they said, this is interesting. They said 200 billion yen of payback, either share buyback or dividend payout, plus 500 billion yen of M&A. This is the interesting shift The first two companies, they're just talking about the payback, return to shareholders. This company, Fujifilm, started saying that not only payback, but also M&As, because at the end of the day, if it's easy for Japanese companies to increase ROE by returning profit to shareholders, but it doesn't necessarily mean that those corporations will grow, and it doesn't necessarily mean this kind of movement will help Japan as a nation. It will help Japan as a nation because deflationary atmosphere will be wiped out if share price goes up. But many of the shareholders of Japanese companies are actually foreign investors. Just payback is kind of outflow of cash from Japanese corporations to investors, including foreign investors. So it's so when you think about but even so, as I said, with ROE going up, share price going up, deflationary pressure will go away, and the people feel better. There will be a big asset effect by share price going up, so that the people will start spending more money. So it's good for Japanese economy. But more importantly, parallelly, if those Japanese corporations should invest into themselves as well, and as well as to pay more salary to the people, to employees. So I think the Japanese companies' ROE being too low. So the first step is to wake up Japanese corporations and increase ROE. And I think that part is already, it's not completely done, but it's really happening. And next step is for those Japanese corporations, do more capital expenditure, invest into their business, and increase salary so that Japan as a nation to be much better. That is, if I go back to this Japan revitalization strategy, it does also says new capital investment, bold business realignment, and M&As. So we are kind of in the middle of making ROE higher and by decreasing denominator by increasing numerator. So that is happening. Because if I share with you the data in the States, comparing the Japanese corporations and the US corporations, the ROE of Japanese companies, on average, on a listed company, is I believe 7%. And the US company is 15%. But the leverage is almost the same these days. Just profit is different. Okay, so US corporations make twice as much profit than Japanese companies. If I say simply. And to make more profit, just pay dividend or just do share buyback doesn't help. But so that is kind of next step. But some companies started doing it. As I said, Fujifilm did it. And also more important example is Fanac. Fanac just recently announced that they will do 130 billion yen of investment in facilities in Japan. Okay, so that is a kind of very healthy way of thinking to increase the ROE. But this all thing happened by this first step of the ROE revolution. Anyway, so those kind of things happening in Japan, and it's very different landscape compared to just like a year ago. And the Japanese market is very strong because of the quantitative easing, and also weaker yen, and also this ROE revolution. So there are those three, things all together working to make the Japanese stock market better. so that I believe that this, how do you say, good environments for Japanese stock market will continue. You may have perceived these days, used to be when the U.S. market, went down last night, then Nikkei goes down today, Japan. It's a very high correlation. It used to be. But starting like a half year ago, there is there's a linkage between U.S. stock market and the Japanese stock market. The Japanese market is really changing, and I've been in this business for like 25 years. But this is really first time that the Japanese corporations and capital markets are really trying to change. So I stay very bullish in the market. Anyway, let me stop here, and I'd like to open up for Q&As.
Thank you very much, Matsumoto-san. Okay. So if I could just remind everyone the rules of the road. If you have a question, raise your hand, and please state your name and your company affiliation first before you ask your question. We will have about 20 minutes or so, and try to speak clearly and slowly enough, because remember, we are on webcast right now, and wait for the mic to come to you. May I invite someone to ask the first question?
My name is Frank Packard. I work at AAA Japan. We're a very small securities company. I think you made a lot of very interesting points, and I wonder, to be a little bit contrary, you were mentioning that Japanese companies aren't that profitable as US companies. I want to believe this. I want to believe, but is it Abe's dream? Is it a bubble? Isn't this just financial engineering, a one-time movement of the cash, this $3 trillion sleeping? It wakes up, it walks out of the house, but the house is still not profitable. Secondly, I believe that Monex is mostly dealing with retail, and I don't think that it's a very large percentage of the volume of the Tokyo Stock Exchange. I think it's mostly foreigners, hedge fund traders, algo, high-speed trading. It's kind of people that believe in a dream can go away tomorrow. And I think that this might be a nice bubble. What are the long legs? Is it more than a bubble? Can it be a long-lasting change for Japan if it's not really a profitable industry, business?
Okay, thank you. Bubble, by the way, is not so bad. Like you drink bubble at night, like champagne, and when you drink champagne, you don't think about you will get hungover next morning. You have to drink and enjoy fast. Okay, so that's very important. But anyway, let me try seriously answer your question. I think the question number 1 and number 2 are samely rooted. Yes, share price went up since the Abenomics started. It's only like 2 years and like 3 months. Japanese public companies' total market cap increased from below 300 trillion yen to now 560 trillion yen. There are 260 trillion yen, like $2.4 trillion of increase of the market cap in Japan. You said that there are many trading done by algo, HFT, foreign investors. They do trade a lot, but still good portion of Japanese stocks are held by Japanese, including retail people. Retail people, forgetting about the mutual fund, forgetting about the pension account, just a direct holding over Japanese shares, listed shares by Japanese retail people, it's account like 25 to 30% of the market. Okay, and as I said, Japanese companies' market cap, listed companies' market cap went up by 260 trillion yen And 25–30% of that is about $70 trillion. It's huge, $700 billion. You know, they made retail investors in the way that they can see the price in the newspaper every day. As I said, not in pension account, not in those indirect form of ownership. In the direct ownership, they made $700 billion, which they can take profit today. Okay, so what's happening was, so those people are very happy, of course, and they are spending money. And there are interesting report by Cabinet Office, Naikakufu, about 2 months ago, talking about nationwide economy. It talks about in Tokyo, Nagoya, and Osaka, those 3 areas, the personal consumption is actually growing fast. And they analyzed in those 3 areas, there are many retail investors. And they analyzed that there's the asset effect. They made a lot of money in stock investment or holding, so that they are spending money. Okay? Why it's not, but the volume, as I said, in TSE is not so high. Because this phenomena is happening and seen only by stock traders, stock holders. This is well-known thing. The people made money. This is a well-known thing inside the stock trader or investor community, but no one knows. I mean, it's not known by people out there. Okay, because the goods price are not really going up, and also real estate is not really going up nationwide. This is also, the kind of tricky thing. Last year, when the government issued the data for the nationwide real estate price, they said, okay, year on year, it was like a negative 0.3% or something. Okay, reality is there are very big, increase of price in the land in Tokyo, Nagoya, Osaka, and Fukuoka. But for those national data publishment, they check about more than 100,000 data points. And they just do this simple average of the year-on-year number. They don't do the weighted average. I believe even last year, year-on-year number, weighted average-wise, should have been positive. But because it's simple calculation, it was slightly negative. And people see it, and then people don't feel that the deflation is over, because land price is still going down. And the land market, real estate market, is twice. Usually in the advanced countries, the real estate market is twice big of the financial asset. So Japan, the financial asset is like $15 trillion. The real estate market is $30 trillion. Stock are held by a certain type of people. Land is held by everybody. So once land price start going up, then people start feeling deflation is really over. We have to, we have to move money out of deposit, because deposit is the best performing asset in the deflation period. We gotta get out of the deposit and into the capital markets. Okay, so that is not really that is not yet happening, but I believe that is going to happen this year. There will be a land price announcement in March and July. It's called the Koji Kakaku and the Rosenka in March and July respectively. And so I think you should watch out those numbers. And once the number comes as positive, then not only personal consumption will be ignited, but also the nationwide executives of including medium to small and medium enterprises, they feel much comfortable if the land price stop going down, they start going up, and then I believe they will start doing the capital expenditure. Okay, so that so this I don't think this is a bubble. First, bubble is not bad, but the second, this is not a bubble, and you will see that the land market will come along, and then Japan will be looking very different. Another thing is, the 30, 40 years ago when the bubble happened in Japan, the oil
I think along with our ACCJ membership application, account applications here today. Could I ask someone for the next question? Here.
Eric Sedlak from Jones Day. Perhaps a related question. I've heard that ROI outside Japan is higher than ROI inside Japan, and I wondered whether there is something in the government's policy that would tend to incentivize the companies to invest back in Japan, or if they expect that the impact of further investment by the companies by taking the retained earnings and investing them offshore would be to create better head office jobs or R&D jobs in Japan. So I'm just wondering how, aside from the asset effect that you mentioned just now, how you think the money will get recycled back into the Japanese domestic economy.
That is, I don't know. I mean, that is probably a little bit too much for the government to dictate corporations to do. But as you can see, like in case of, this Fujifilm is, M&As, but probably it includes the overseas M&As. And the FANAC very probably intentionally, clearly articulated that they will do investment inside Japan. Okay, and I don't think this is pushed by the government, but the management of FANAC thought, as like you questioned, and then they decided to do in this way. But I think maybe I'm too optimistic, but I think many Japanese corporations are thinking raising salary, thinking doing more investment inside Japan. So somehow, this time, Japanese, of course not all Japanese corporations, but the many Japanese companies are thinking in the kind of same direction to let's make this place better. So I hope, I think FANAC tried to become the kind of positive deviant, and we will see more of those positive examples, and then more companies will follow, I believe.
Thank you. Next question, please.
Thank you. Richard Solomon from Beacon Reports. I write about the Japan's economy. This is a question sort of related to Frank's question. Japanese investors are known to be long-term orientated, that they do not trade in and out of stocks, Japanese companies. They hold shares for long periods of time. You've suggested that there's a delinkage now between the US and Japanese stock market, sort of indicative of what Frank was saying, that perhaps foreign investors are are being joined perhaps by the Japanese investors in pursuing return on investment as a short-term strategy. Is that your conclusion, that Japanese investors now are trading more actively?
I don't think so. As I said, when you say Japanese investors, I think you mean more about the Japanese institutional investors, I believe, in total. Japanese institutional investors, as I said, largely they are indexed buyer, okay? And the indexed buyer, usually long-term investor, they just hold on to the index. And also, usual index buyer, they tend to provide the negative gamma, if you understand. They tend to sell to the bottom. They tend to buy at the peak. Very bad, okay? Because that is how the Nikkei or topics. The topics is just index, it's a market cap of the Tokyo Stock Exchange. Okay, so that if it goes up, then the weighting inside investor, the weight to the market, Japanese market, become higher, so that they need to allocate more money. So they buy to the top, and vice versa, they sell to the bottom. So that being pretty bad, trading activity. But the JPX Fund 400 to this ROE discussion, actually, I believe creating interesting shift of the investors' behavior. They still stay as the index buyer, but not topics, but JPX 400. That is ROE oriented. It means the job is still following the index, but they know, and as I said, JPX 400 is basically objectively calculated every year to pick the best 400 ROE companies. So that the Nikkei, for example, the 225 is basically they do change the symbols, but basically they stay the same, kind of. But the ROE, JPX 400, every year there is a change of the issuers depending upon the ROEs. So that now those index buyers, they have to pick who are to be in the index. If inside 400, if some companies getting out of it looks like falling off of the index, they have to sell fast, and they see if the other companies are coming into the index, they'd like to buy fast. Okay, so that creates the kind of how do you say, more like not like sell the bottom, buy the top type of activity. More like try to pick the shares if companies share price goes down, then the ROE seems better, then they try to buy them. Blah blah blah. So I think this shifting index from topics into JPX 400 actually create more elastic, dynamic investment behavior to Japanese investors. I may be a little bit too optimistic, but we do see some different behavior in the market.
Thank you. Next question.
Ken LeBrun from Sherman and Sterling. In the U.S., there's been substantial pressure on U.S. corporations by activists and institutional investors to focus on their core businesses, divest or spin off non-core assets in order to, again, increase return on equity. So far, you've discussed M&A in the terms of acquiring, investing in new businesses, spending excess cash. But do you think that the trend towards divestitures and spin-offs will come to Japan as well?
I'd love to see that. And this is something that you can help us. Okay? Just like 5 years ago, if the US fund comes to Japan and then try to do the activist type of activity, and then issuers say, oh my God. And not only issuers, but also the press, medias, the people in Japan says, oh my God, here comes Hagetaka fund, right? So they really try to reject those activists. But today, they just change their name as engagement fund. Not activist fund, just say engagement fund. And now the government, if it's FSA or METI, they are really encouraging engagement, right? So I'd love to see those activists to come to Japan. I mean, for Japanese, activist engagement, doesn't matter. It's the same jargon anyway, right? So just change the name as engagement, and then there is a very good chance, I believe, a much better chance than several years ago. Those activity will result in changing the Japanese corporation's behavior, including divesting the non-performing business, those kind of things. So I really encourage that you are connected to those community, and we Japan will welcome those activity from those investors.
Yeah, I think if you look at the funds that are operating in the Japanese market today, they're very eager to engage with divestitures and things like that. So you see a lot of activity currently in a much more constructive way, as opposed to a distress type of situation that we saw a few years ago.
But communication is always very tricky, by the way. Remember that third point? Try to have Sony to divest entertainment about a year ago. Now happening is completely vice versa. Right? So sometimes, if you make mistake in communicating with the Japanese corporations, they may react very, differently. So that is something, you should keep in mind.
Thank you. Next question, please. Really? All right, I'll ask my question. Oh, here we go.
Thomas Shockley from Document. It's an IT company. First of all, I like your jeans. I wish I could do more of that. Very well done. The question comes to several of the points you've made. Put in mind that I'm referring to large manufacturers in Japan that are energy consumption, chemicals perhaps, agriculture goods, pharmaceuticals. Yes, they have lots of money under their pillow. Check. They have outside board of directors. Check. They are intending to increase the salaries and or have increased the salaries. Check. They want to invest the money. They take their money and look at it. Their investment is towards the United States, where the energy costs are very, very low. So the question is, if that is happening, if that's true, confirm if it is or not, then how is that funneling back into Japan to come back to the point of increasing Japanese stocks, etc.? I'm not an economist, so I'm mixed up. If the investments of the Japanese manufacturing, the capital is flowing outside Japan, how is that going to then, in case of the United States, I think it will mostly remain in the United States for various other expansion reasons. How is that going to affect your premises of having the stock going up in Japan?
If the Japanese corporations make investment outside of Japan, that is a problem. So for Japanese corporations, that's a very a big question. Japan as a nation, we can't stop. We are going to be smaller. If you think about 20 years out, if you think about the GDP stake, population stake of Japan or Japanese in the world, it will be maybe a half of today. Okay, so Japanese corporations has got the fate to try to go globe. That's the only way that we can survive. And meanwhile, investing into if they keep investing outside Japan, it may not really help Japanese economy. But if they just keep investing into Japan, in the long run, it won't help Japan, because it doesn't. Even we keep investing inside Japan, GDP won't grow as much as we wish, and the population won't grow as much as we wish, because the growth of the growth of the world outside of Japan is much faster than Japan anyway. So I think there are we need to have a good balance in those two things. But I don't know what would be the optimal answer for us. But Japan, Japan, for Japan to think about Japan just as Japan only is totally nonsense, right? I don't know. But the thing is, today, we need to get out of this deflationary mindset. For Japan to have an inflationary mindset, for Japanese to have a very ambitious, mindset, and then try to go out of Japan, I think it's good. If Japanese corporations go out of Japan with the mindset of, gee, Japanese market is shrinking, so let's go out of Japan, that is bad, right? So, because Japan's been in deflation for 20 years, the mindset of the people, employees, and the management are somehow discouraged, and we have to change it fast. We need to gear up the mindset of Japanese executives and everybody, and then we can maybe redesign how the Japanese economy or Japanese companies should be going forward. And I think we are still at the first stage to get out of this long-lasted deflationary mindset. So I think for that meaning, what Abe is doing, I think is right.
Very good. Well, thank you very much for all your questions. We're going to have to call it to a close here. Can we please have a nice round of appreciation for Matsumoto-san?